Today we're going to talk about the Dodd Frank law. The Dodd Frank Act is fully known as the Dodd Frank Wall Street Reform and Consumer Protection Act. It's a United States federal law that places regulation of the financial industry in the hands of the government. The legislation, which was enacted in July 2010, created financial regulatory process to limit risk by enforcing transparency and accountability. To promote the financial stability of the United States by improving accountability and transparency in the financial system. To end too big to be failed. To protect the American taxpayer by ending bailouts. To protect customers from abusive financial services practices and from other purposes.
Session of the last 20 was due in part to low regulation and high reliance on large banks. One of the main goals of the Dodd Frank Act was to subject banks to more strict regulations. The Act increases the amount that capital banks must hold in reserve, giving the banks an added cushion to absorb loan losses in the future downturns. It similarly requires banks to keep a larger portion of their assets invested in things that can be easily liquidated in the event of a bank run, namely cash and government securities as opposed to term loans.
Not faced by regional and community banks. Under Dodd-Frank, every bank with more than 50 billion worth of assets on its balance sheet must submit to annual stress tests administered by the Federal Reserve, which then determines if they will survive a hypothetically severe crisis akin to the one in 2008. As a part of the stress test, these banks must also seek regulatory approval to increase their dividends or authorize new share repurchase programs. Proponents of Dodd-Frank believe the Act prevents the United States economy from experiencing a crisis like that of 2008 and protects consumers from many of the abuses that contributed to that crisis. Detractors believe that compliance burdens the legislation, creates and makes it difficult for U.S. companies to compete with foreign counterparts. In February of 2017, President Trump issued an executive order that directed regulators to review provisions put in place by the Dodd-Frank Act and submit a report on potential regulatory and legislative reforms.